We believe master limited partnerships, MLPs, play a critical role in the U.S. energy system. They own and operate pipelines, storage facilities, and other infrastructure assets that support the transportation of energy. Historically, MLPs have been one of the highest yielding segments of the U.S. energy infrastructure and the broader energy market. In addition, they can offer stable cash flows while also providing tax deferral benefits. But historically, investing in MLPs required dealing with complex K-1s and tax reporting or structural inefficiencies inside traditional C-Corp funds. The Tortoise MLP ETF, TMLP, was created to remove these frictions while still delivering the economic experience of MLP investing. Sporting over 20 years of experience, Tortoise Capital has a legacy in the energy MLP space. TMLP provides exposure to U.S. energy infrastructure MLPs in an ETF structure that simplifies tax reporting and improves distribution efficiency. Classified and taxed as a regulated investment company, or RIC fund, under the Investment Company Act of 1940, TMLP offers quarterly distributions with a single Form 1099 and no K-1s. TMLP provides structurally efficient access to traditional MLP economics with a modern tax-aware ETF framework. TMLP tracks the total return of the Tortoise MLP Index, a proprietary rules-based benchmark designed to represent publicly traded U.S. master limited partnerships primarily engaged in operating energy infrastructure. The index provides disciplined, transparent exposure to the MLP ecosystem and serves as the economic reference for TMLP's total return swap exposure. The objective is to minimize structural tax friction while preserving full economic exposure to the MLP market. A total return swap is a contractual arrangement that allows the fund to receive the economic performance of the MLP market, including price movement and embedded cash flows, without directly owning the partnerships. These swaps help enable longer dated exposure with fewer resets, eliminate rebalance-driven gain realization, and minimize tax drag, enhancing after-tax compounding. Traditional MLP ETFs often hold MLPs directly and are taxed as corporation, causing them to accrue deferred taxes on unrealized gains. This 21% federal corporate tax drag reduces their ability to capture the full total return of the MLP market. By contrast, TMLP uses total return swaps to avoid corporate-level taxes and capture more of the market's performance over time. TMLP holds short-term U.S. Treasuries seeking to generate ordinary income to fund part of its quarterly payouts, while the rest comes from swap-based MLP exposure. Since swap returns aren't taxed until they're realized, that portion usually shows up as return of capital. Return of capital here reflects tax timing, not a return of your original investment. TMLP aims to distribute part of its total return while staying fully invested in the long-term MLP market and does not plan to distribute more than it earns. You won't owe taxes on return of capital right away. It lowers your cost basis, and you'll pay taxes later when you sell, potentially at long-term capital gain rates. Total return swaps introduce counterparty risk and financing considerations. TMLP manages these risks by working with high-quality counterparties and operating within the transparency and regulatory framework of the ETF structure. Holdings, exposures, and the net asset value are disclosed daily. In summary, TMLP is designed to provide exposure to U.S. energy infrastructure MLPs, capture more of the MLP's total return by avoiding the corporate-level tax drag, funding a portion of distributions through treasury income, but the remainder of distributions as return of capital due to tax timing, and simplifying tax reporting through a single Form 1099. As one of the largest energy infrastructure managers with more than 20 years of experience, we have an in-depth understanding of the sector and everything that energy impacts. Tortoise Capital. Experience the benefit of having a smarter way to invest in MLPs.